I'm actually pained right now because I recorded this video or made this analysis before on recording, only for me to go back and I realized that it was mute, right? Yeah, I was so pissed. You understand? Because I already put in minutes, up to 20 minutes into this analysis, trying to explain to you guys, but then it was not recording, so I have to now redo it again. All right. So what I'm going to do, I'm going to go through everything I did before. I'm going to delete all this now. I'm going to delete all of this. Then we're going to just go over it quickly. Do next, right? So we started with, of course, this was the last analysis I did before. I think it's been a while now because for a while now I've not really been active on gold. I've not really been trading gold and all of that. I've been trading more of synthetic indices than gold. So this was the last analysis and gold was in a range at that point. Oh, we expected it to go up, but eventually it broke down and since then kept going down. Okay. So what we did is we went to the higher time frame. First of all, started from the weekly. Right? Because that is how you know your bias. You know what the market is actually doing. Okay. So if you look at the weekly time frame here, you notice that there was a previous low that was taken out. So let me draw that out. So notice that this low was taken out, right? But if you look deeply, if you actually look deeply in terms of structure, you will understand that this whole thing that's happening is more like a structure repeats. Okay, so if you look at it, take a good look. If you look at it, you notice that this was, right? This was a structure. And whenever market does something like this, market usually come back to retest this zone. Okay, usually come back to retest it. So this is basically what was happening on a larger scale. And this is why gold is what was going down for a while now. Okay, so if you look at it, you notice that gold came back here to test out this zone here. You understand? So it's all part of what? A bigger structure for the market to continue. Of course, you know that the market moves what? In waves. And this is how trends behave. Alright? So let me draw this out with a rectangle so you see. So yeah, this is the zone. We'll delete this line and see that the market neatly retested this zone. Okay, and if you look now, there was kind of like a rejection. Of course, it went below this previous candle low, created a new low, but it's all within the zone. Understand? It's all within the zone, and the market gave a rejection. So as at this point, we can now start thinking, okay, there's a valid reason for this market to go up. There's a valid reason for this market to actually start going up from now. You understand? So we'll go to the daily time frame and we'll see what is actually happening in the daily time frame. Okay, what is happening is just series of bullish candle, which doesn't really tell us anything for now, right? We already know that the market is in a zone where we expect it to make a retracement or continue moving on, but this daily time frame, as at this point, doesn't really give us any information. So we'll go to the 4-hour time frame. So the 4-hour time frame. So what do we see in the 4-hour time frame? We see that yeah, the market is making some series of highs. Okay, yes, but we can't say this market have broken structure to the upside until it breaks this zone or this line per se. So let me use a straight line. We can't really say you have broken structure until it actually it breaks through this, and for now it haven't broken through. So yes, it might be that the market is going to retrace, but for now we don't know, or we can't say for sure until we break through that this low or this swing. Okay, so what do we expect? We expect the market to break through and probably give us a retracement to this zone or to this zone, right? So it could come to this zone and move up, which is most likely to happen at least 70% chance that it's going to happen, or it's going to break this zone and come down to this zone. And if it comes down to this zone, there's only just 30% chance that this zone is going to hold, because if it comes down to this zone, it's very likely to come back down here, play around before continuing going up. But the real deal here is that the market, most likely there's a 90% chance this market is going to respect this zone. You understand me? This big zone, that is the higher time frame zone that we draw out, this zone. Okay, why is that? Of course, because you know that the higher time frame zone, of course, is usually stronger than the lower time frame zone. That is one. And also you have to bear fundamentals in mind, right? You have to think about in terms of fundamentals, what is gold actually doing in relation to what is happening in the economy. You notice that anytime there is, peace, okay, when there is peace, most people tend to remove their money from gold to put in a more risky asset. Why is that? Because gold is like a safe haven, right? Gold is like where everybody will go to just keep their money, right? Especially if the economy is not stable. So if there is maybe war, situation of war, tension, those kind of things, most people are going to put their money, investors are going to put their money in gold, okay, to protect it. But in a situation where there is peace, everything is going there, most times people tend to remove their money from gold. So that's something you also have to bear in mind. And as at this point, Trump already spoke about the de-escalation of the war between Iran and USA, of course, and there was a peace proposal, meaning that almost coming to an agreement. So that is telling you that most likely people are going to want to pull out their money to go and invest in more risky assets. But it doesn't always work like that, right? Yeah, gold most likely can also continue going up. We don't know. So for now, this is what we expect of gold to break this structure to the upside, then probably retest or retrace to. So this is the first zone we are looking at. This is the second zone we are looking at. So what do we expect? We expect the market to come back, or you get from gold. Okay, this is what we expect from gold. So this is what we expect from gold as of this moment. And so for now, I can't really trade gold. I can't really trade gold long term, except I want to scalp. Okay, going down to the lower time frame to scalp and maybe trade in mini time frame. But for now, if we're looking at it long term expectation of gold, this is what we actually expect from gold. So let me know what you yourself think about gold in the comment section. Do you think gold is going to be bullish, continue bullish, or is going to turn back down and continue going bearish? What do you think in the comment section? So let me know what you think, and let me know when you're also watching this. All right, so this is it, guys. And also, if you are here and you've been struggling with trading, maybe blowing your account, trading for years, and you have nothing to show for it, I run a rule-based trading system with defined risk management and controlled exposure. My main goal is basically to protect your capital while generating steady profit over time. I'm not an account flipper, okay? I trade in percentages. My goal is to generate steady, consistent profit without risking so much of the account. All right, and I do this using the FSB Atlas, the #1 trading system in the world, created by me. All right, if you also want that, you can also drop a comment in the comment section. And if you want to cash in on the account management program, you can send me a message directly, or you drop a comment in the comment section with the word FSB Atlas. All right, so this is for today's video, guys, and as usual, don't forget to like and subscribe. Until we meet again, peace.